So, Chapter 9, Banking Process, the Incoming Payment. So, when a customer pays using cash, check, or credit card, you enter incoming payment that generates the following automatic journal entry. The debit on a clearing account, cash on hand, credit card, checks received, and the credit on the customer account. So the system retrieves the cash on the on-hand account for the cash on hand paid on the sales tab under administration. Setup, financials, GL and account determination. So in the credit cards, the system retrieves the credit card account for the GL account paid in the credit card under administration. So administration, setup, banking, and credit cards. The external tools like point of the sale system and authorization of credit card transaction can be integrated into standard process. In the check, the system retrieves the check retrieves I receive account from the checks received field on the sales tab under administration. Setup, financials, GL accounts, and GL determination. You can change the default clearing account while issuing the incoming payment. A deposit document must be processed in order to transfer the funds from the clearing account to the house bank account and clear the clearing account. The deposit function in Sap B1. Go to the banking, deposit, deposit. Bank transfer. This payment does not involve a clearing account. The customer transfer in the payment directly to your house bank. Debit on the house bank, credit on the customer account. So the outgoing payment. Outgoing payment means the check, credit card, cash, bank transfer. Note, the system does not involve a clearing account for manual outgoing payments for credit card, checks, and bank transfer. Instead, the credit posting is done directly on the bank account. Posting for outgoing payments, cash. Debit on vendor account, credit on cash on hand account, or the bank account number. Because most of the companies have multiple cash register with one assigned cash on hand account each, you must manually enter the correct cash on the hand account number. Credit card, debit on the vendor account, credit on the bank account, you must manually enter the bank account number. In check, debit on vendor account, credit on bank account, you must manually enter the bank account number. Bank transfer, debit on vendor account, credit on bank account, the system retrieves the bank account from the bank transfer feed on the purchase tab under administration. Setup, financials, and GL determination. In the external reconciliation, so in the external bank statement, bank account, printed statement and ending balance and open transaction in GL account. So manual reconciliation. This function enables you to verify and reconcile the transaction recorded in Sap B1 against the balance received from the bank and to create adjustments if required. Let us see how an external reconciliation is made. Go to the banking statement. Which is the one more reconciliation. The external bank information selects criteria Windows opens. Use this window to specify the parameters for external bank reconciliation in the account code. You can choose the bank account for which you would like to process the external bank reconciliation. Under the bank statement title, you can see fields related to actual bank statement. The last balance field displays the balance as you recorded it the last time you performed the external reconciliation. Let's say you have received the statement for your bank update for today. Instead of detailing all the transactions appearing in the statement, you can simply type the ending balance of the statement according to a certain date. Let us say you receive an external bank statement for this bank, the ending balance of XXX. The bank statement is updated for today, let us say April 2020. Choose OK to open the reconciliation bank statement window. The table displays the open reconciled instruction as recorded in both the instruction recorded in business one. So in chapter 10, the financial chart of the accounts. The chart of accounts is organized by drawers and levels. The organization of the chart of accounts follows GAAP or General Administrative Accounting Principles, in which there is a separated drawer for accounts representing assets, liabilities, equity, capital and reserves, revenues, turnover, cost of sales, expenses, operating costs, financing and non-operating income and expenditure, and other revenues and expenses, taxation, and extraordinary items. This drawer, which have been defined by SAP and cannot be changed. Organize your accounts by level in logical fashion, appropriate to your financial accounting and reporting process. In the general ledger, we distinguish between balance sheet accounts and income statement accounts, also called profit and loss accounts. Balance sheet accounts. The first three drawers, asset, liabilities, equity, and capital and reserves, hold the balance sheet accounts such as sales tax account and the account payable account. The bookkeeping model of this account is kept from one fiscal year to the next year. The balance sheet accounts reflect the monetary value of the company, stock, assets, etc. Profit and loss accounts. The last five drawers: revenue, turnover, cost of sales, expenses, operating costs, financing and non-operating income and expenditure, and other revenues and expenses, taxation and extraordinary items, all the profit and loss accounts, just as income accounts. Note that in some localization, the lower drawers are not all profit and loss account drawers. The bookkeeping balance of these accounts has to be cleared at the end of each fiscal year. This is the period and closing process will be discussed in Unit 4, Financial Periods Process. The profit and loss accounts reflect the changes in the company value such as sales, stock, cost of goods sold, increased revenues. In the reports, financial reporting requires to drive most of the initial settings and configuration decisions. The different financial reports run on the account balance relevant to a selected range and present them according to their drawer level and type. The balance sheet summarizes the value of the business asset, liabilities, and owner equity accounts. The trial balance details for each account, beginning balance for a particular period, all the debits and credits, and the ending balance. Profit and loss statement. Up to the end of the fiscal year, the balance of the expense accounts will be subtracted from the balance of the revenue accounts to come up with profit or the loss for the fiscal year. A chart accounts arranges a company general ledger accounts in hierarchical structure. The top level in structure, level 1, consists of sections or groups for different types of account: assets, liabilities, capital and reserves, turnover, and so on. Number of account groups depends on the location that was selected when the company was created and cannot be modified by the user. The system displays the section as a cabinet drawer. Each drawer has a section title which allows you cannot change. The system displays lower level titles in the blue and normal active accounts in black. Accounts that you have entered in GL account determination, default accounts are displayed in green. Level 2 or 4 can contain either active accounts or titles that combine several active accounts. Level 5 only contains active accounts. Because only active accounts can be posted in Sumisim 1, it's a good practice to have all your active accounts at the same level. And of course, a total account summarizes all the balance of each account below it. So in the journal entry, in Sumisim 1, a journal entry is commonly posted from many documents such as AR and AP invoice. Additionally, you can manually post a journal entry directly to a jail account or to a business partner sub-ledger account. All journal entries are posted to one file in Sub-Business 1. The journal entry file, you can set various defaults for journal entries. You can also change some document settings for individual journal entry. So the screen for entering journal entries can be divided into three areas: the document header, data, extended dating, editing mode for an item and item table header. Automatically journal entries created by document in Sub-Business 1. The fields are filled automatically from the documents fields in manual journal entries. You set the values. The system automatically enters a number in document header. This number is incremented with every transaction. You can define numbering series for journal entries on the document numbering scheme and under administration, system initialization, and document numbering. So, administration, system initialization, and document numbering. The three dates the header default to occurrence system date, but you can change them. Posting date. This date determines the posting period and therefore the fiscal period for financial reporting. You can post to an earlier or later date if the posting period is unlocked for posting. Due date, the date the transaction is due. Document date, the date used for tax reporting purposes. You can use the reference 1 and reference 2 field to enter reference associate actual numbers. You can also classify the document using a transaction code, for example, as an accrual and deferral document, depreciation document, or value adjustment document. To choose administration, set up, financials, and the transaction code. So, to maintain the transaction code, the system copies the description of the transaction code to the details field. In the posting tools, you can post a journal entry by entering a journal manual entry using a posting template as a recurring posting from a journal voucher. The posting template. You can create posting templates for journal entries that have very similar structure. This template can contain account numbers, but you can also specify an account description and a line item if you do not know which extra account will be used for this line item. Instead of fixed amounts, only percentage are entered here. This percentage indicates how the total amount is distributed among the line items. The illustration shows an example of how you can allocate out a utility expense like the electric bill to its components expense at a specific percentage rate. The posting template is stored under a code with a description. Choose financials. Posting template. To enter and maintain posting template. When you enter a journal entry manually, choose percentage the template type field and enter the template code in the template field or press tab and choose it from the list. Enter an amount in one of the lines and template will allocate amounts to the other line based on the percentage rate. In the recurring posting, Sap B1 features recurring posting functions offer similar fixed amount journal entries created on a regular basis. Choose financials. Recurring posting. So, to enter and maintain recurring posting uses a template that is stored with a code and description. In this template, you define, among other things, the frequency in which the journal entry is supposed to be created and until when the recurring posting is valid. The possible entries in a frequency field include daily, weekly, monthly, quarterly, half-yearly, and annually. You must also specify the next execution date for these entries. One time. Although a one-time recurring posting seems a bit odd, it serves a special purpose. With this, you can schedule a journal entry for a specific date, the template. Journal entries that you need repeatedly but not on a regular basis can be created as this step. You can access this template from the manual journal entry. To do so, you must specify recurring posting in the template type field. Not executed yet. If you do not need the recurring posting at reference, you can turn it off with this entry. In the valid to field, you can enter a date until which recurring posting is valid and will be executed by the system. The system duplicates the original recurring posting every time the execution date arrives. When you use this instance and add it to the system, it will be deleted. You can display a list of all recurring posting in the system. You can then adjust this posting and confirm them. You can also configure the system so that the execution list is displayed automatically in the execution date as soon as you log on. Choose an administration, system, general setting, and select the display recurring posting on execution indicator on the service tab to activate this service for your user. You can add recurring posting to each cash flow which appears in the green in the record. In the journal voucher,